All right, yeah. So good morning, guys. So it's one of those days where we're very slow to enter. Have to respect the risk. Doesn't matter how good you are, you cannot predict slippage. So on days like this, when you know the volatility is coming, you know what time is coming, we vibe. But still, we'll take a look at the price action, see what's happening, see what we were expecting, and how it played out, and how we can use that information to make a decision. So starting with DXY, again, all of this outlined before, you know, why we didn't want to see price come back below here, all of that. It's gotten to our objective. Now, the next question is, where's the draw on liquidity right now? We've taken this and we are above that imbalance. Since we broke below the order block here and we didn't retrace beyond or above this low, that low is the first place to expect price to trade to. What is it going to do when it gets there? We don't know. We don't care. We just want to see it. If it's closing above, we make a decision. If it's not closing above, we make a decision. But we're not in the business of predicting everything on price. We need the guys with the money to show us something before we move. Zooming into the price action, what we have is, again, this candle's low. I'm now seeing there's an imbalance right here where this candle closed and where this candle opened is not the same. So by definition, that's an imbalance. Why didn't I point to this before? It wasn't relevant to the analysis. If we're looking at right here, why do we need to look at that? Outline 10 years of move just to trade today alone? That don't make any sense. Too many things on the chart. So now this is no longer relevant right now because we're way above it. We're trading in this territory. This isn't even relevant, but I'm keeping this because this looks very one-sided and retracements are possible. So being realistic, this candle's low, that imbalance. Are we going to accumulate here or not? I'm not sure. We could drop to a lower time frame to try to refine this, but then doing that is you trying to do too much. There are some times like today where you just need to wait for price to show you what's happening. So let's talk about delivery. What would you like to see when it gets here? If we close above this imbalance and we retrace, I would not want to see up candles closing here, closing below here if I'm bullish. That defeats the idea of this being immediately bullish, right? Trading through here, my first guess or my first anticipation is that the failure swings at the swing high should get taken, just like UCAD. So you remember, if we hop to UCAD real quickly, this is a swing high, but we're focused on price trading here first. Same thing with DXY. Now that it's above this imbalance, in terms of liquidity pools, let's grab that high. This is now where I'd be expecting liquidity to be resting in this market. We trade at the liquidity pool, and here gives me all the information we need. So now we could be so bold as to do this. The top of this imbalance to the liquidity pool, it is not far-fetched to say that price can and is very likely to trade inside here for the next week. So today's Friday. For the next week, we could go as far as I say high of the week, low of the week, but let's not do that. Let's stick to prices trading inside this range for the next week until we break out. Everything, retracements, push inside this box is perfectly fine and perfectly logical. So don't overthink it. We've just broken a high right here, which is the high of the imbalance. For consistency. I'm gonna put a red line on the high of the imbalance. We could have the bulk of the volume staying inside here or just above and below it, wicks or bodies right here. But this range is where I'm expecting price to be trading in for the next week, unless we have some major volatility driver. For right now, I don't see it. So that's what we're looking at. I'm still bullish. There's nothing here that says you should not be bullish, right? So keep that in mind. We're still bullish DXY. It's above the imbalance. We stay bullish until we get a change in the state of delivery or a shift in market structure. For right now, we're above this imbalance. We'd like it to stay that way until we get the liquidity pool. NAS, nothing new really. These are the lows inside here that we talked about. I'm very likely to have NAS sweeping those lows. Quick review on NAS, H1 bearish, FVG, H1 will be inside. I'd have to do this. Where's it again? How do you do this? View on in time frame. I'm trying to find the way to get to H4. I'm pretty sure it's staring at me and I just need to see it. Or I think I can right click
on
yeah.
the time up there, so, and then go
yeah, just remember. So someone was asking in the chat about H4 imbalance with H1 OB inside. Let's see. H4 highs rated, accumulation at the high, push. Sell side liquidity, inside accumulation, taken. This is no longer bullish as of right here. As of the close of this candle, this is no longer bullish, which means that we now have a dealing range being created. Space bar on MT4 or on trading view. Yeah, not on MT4 trading view. So this is a dealing range being created right here between this high and this low. So at the close of this candle, you automatically expect a retracement back inside here to here. You could fib it, look for OTEs, or you could fib it and look for equilibrium and anticipate that push above. So like here to here. 50% of the dealing range, imbalance at the dealing range. That's what you expect to come next after this candle closes. You can just. So if that's correct, and we just broke into the downside of the dealing range, we retraced and then we broke again, this is bearish. And it's all about where is price likely to trade to. This was a very clear accumulation. We had a push. This is giving me market maker vibes, market maker model vibes, which means this imbalance comes on the menu first, and then that 13,000 level. Can it do that all in one day? It's NAS, of course it can. Do you call it FVG as an imbalance? And a FVG is an imbalance. It's inefficient delivery, based on my understanding, unless there's something I didn't understand about that lesson. But FVG is an imbalance. So below here, that's the focus. If I was looking at this time frame only, I don't like H4. I just don't. On a daily chart, these lows are the same lows I just looked at on H4. So I'm not missing anything by using the daily chart. These lows inside here, we have a daily candle that started a push. So I'm going to take this line off and put it on that low to this high. And if we might be so bold, we're looking at this as the next draw on liquidity. Because we're waiting for DXY to commit at this price, you don't want to automatically start saying this is going to fall out of bed and go all the way down here. We don't know that yet. We need to see a confirmed impulse or confirmed displacement that would mean taking out this low. This could just be a retracement and then price pushes higher because it's inside the expansion or the impulse. This is the consolidation here and then the impulse. Retracements inside here, perfectly normal. If this imbalance was not here, where would I expect? I'd probably pull a fib from the high to the low, find 50% and anticipate a retracement below that, all right? I wouldn't be looking at H4 imbalance at all. When we get to H1, I look at what the H1 says and then I'll probably make a decision there. So if that's the idea, 50% is pretty much where we are right now. We're waiting for 930. Let's see what 930 does. If 930 pushes down inside here and my model forms, I'll go long. If 930 just pushes and I don't get a setup, then that's it. Today is not the day to chase it because these impulses can be so fast at equities open. It's really, really insane. So you want to identify the levels that you have on the menu for where price is likely to trade to, and then you wait. When it gets there, you make a decision. For me, based on this current time frame, this is where my next decision will be made. If we hop to H1, since we have the benefit of the analysis, that's going to be right here. If 930 is retracing, where do you expect it to retrace to? An imbalance between this high and this low. I'm sure you'll be able to see them. So for now, it's a do nothing period for Nas, right? It's almost in 50-50 territory of, one sec. I thought everyone was muted. There we go. It's in 50-50 territory of where this impulse started and where we're expected to go. Bulls buy low, bears sell high, pigs get slaughtered in the middle. I'm not feeling like being slaughtered today, so whatever is happening inside here is not enticing for me. AU, just run through the daily charts. We talked about AU yesterday. This is on the menu for me. I believe that all of these lows inside here are fair value for more buying. So unless we get a strong close below these wicks, this guy is going to range between here and here. That's what I think. And that's what I'm expecting. So it's just a matter of waiting at this point. For upside potential, we have a whole lot of imbalances here. In particular, this high, right above 7,000 or 0.7, looks very attractive for a long to me, but I don't see any market structure shift to the upside as yet. So I'm not going to buy. And AU just took previous week's lows based on somebody in the chat. So yeah, nice market maker model on a lower time frame, I can imagine. So if this is the end of the market maker model, we usually get a retracement of sorts right after. This low is also lining up with this. So from a perspective, everything says I should wait to see how price reacts here before I commit to anything. Does that mean don't take a trade today? We don't know. Possibly. But for now, you stick to the plan. Stick to your plan and you do nothing. There's a whole lot of things inside here. This could be a larger market maker model, and this could be my model. So price retracing back to here, again, that 0.7 level is perfect. Shorts from here, down here, I can vibe with that. But for now, it's not there. So you relax, or I'm going to relax for sure. Quick question, why have you marked that high from before with the red line? This, I think we explained that in yesterday's call, but once we broke these daily highs and then there's that impulse, there's an idea called exchange of liquidity, coined by a very good friend of mine. All the lows above here will house liquidity, and that makes them fair value for more buying. If you take a look at this impulse, where did it start? Below the lows that are right here. But the fact that this or these lows didn't come back to this high For me, that suggests that this is an engineered pool of sell-side liquidity. So while I want to see price higher, I want to see it start at or below this red line. So for now, intraday scalps or do nothing, but nothing exciting on AU for now. And remember, the fact that we want to see a reaction from this candle's low with DXY, the candle hasn't closed yet. We're barely into New York session. Lots of time to do a lot of things. So we wait. Exchange of liquidities, yes. Hashtag not thought in books, kidding. So we talked about the fact that we want to see this guy trade up here. This we're looking at as the potential daily order block. Tagged it yesterday. It would be nice to dissect this on a lower time frame. Let's see what we have. Same idea. Huge imbalance. This high broken right there. Price hasn't returned to that yet. So if we get a sweep of this day's low and then immediately reject, so let's say a wick or a body down here and then the next candle trades higher, I start looking for market structure shifts at or just below this dotted line, and then we can get a potential maybe 200 point long on that. What invalidates that idea? If we get to this imbalance, fill it and still pushing low, then I'm not going to do anything. If this, then that. Not, oh, it's support, buy, oh, it's resistance, sell. If this, then that. Because this looks all of this looks very imbalanced to me. And since this is the last high that was broken, I want to see price trade back below here. But this is a daily order block, right? You have to keep in mind that this is a daily candle, which means if you're being conservative, this entire body, the upper 50%, we could have deep runs inside that, but I still want to see higher prices. So if you factor that in, let's transpose this to H1 again, put more context in. 50% is coming in right here at 161.2, which is just below the imbalance that we want. So if price is trading down here, then I'm fine with that. Okay. So in the event that I don't get what I want at this level and price is still pushing, my bias for me remains valid unless we start destroying 161.2. Then we get that trade up to, what's that level again? Right here, then we can see more selling. So I'll leave that fib on and see what happens when we get there. All right, gold. Talked about this yesterday as well. This is the most likely area that gold would trade to for more buying. It's in fair value. It's below the highs. We have all the lows resting after the high was taken. This is the sell side liquidity pool. That's interesting. How far would I expect this to go? Right here. If it doesn't go below that, then it should form inside here and then push. I think we talked about that yesterday. GU. Let's see. On principle, again, this would have been the failure swing at the swing low to look at. There, not yet there. There's a big imbalance that we just filled in. I can't see exactly what's happening here on a daily chart, but I would be looking for a little bit more downside. I don't feel comfortable buying anything here with a stop below this, personally. That's higher time frame liquidity pool, and today is the day that contracts expire. Higher time frame liquidity pool comes on the menu when contracts are expiring because the big guys are trading off these higher time frame levels. Based on what I understand, right? This is not financial advice. So yeah, same idea here. Talked about all of this. Liquidity pool tagged, we're now trading at the imbalance. For the same reason that we think NAS is likely to trade low. US 30, no, I mean US 500 could trade down here. But the thing about this is I don't like it. It tends to lag. It tends to lag. I'm not a big fan of SMT to measure them and look at which one is heavier. So I think NAS is heavier on principle, but these are the imbalances. This is the high right here that was broken. This is the lows above the high that was broken. Sell side liquidity is resting there. And if by now you haven't taken note of that, then you're not doing yourself any justice. High broken, lows formed above the high, sell side liquidity is going to be there. EU. Now, EU looks more tradable in my opinion. Would you be interested by taking shorts on us if we get retracement? Yeah, I would. I would. But when we get to H1 chart, we look at how probable that is. This is just analysis. There's no execution or setup time frame view yet. Daily chart. This will have been the failure swing. That candle's low. Still a very far distance, but the fact that we are inside the order block in comparison to this guy right here with an imbalance there, I would be more inclined to believe that this could trade higher first, if that makes sense. But when we get to, again, a lower time frame, we'll see all of that. UCAD. So this was the level that we anticipated to be traded to first, because that's a failure swing. It got there, and now we are trading inside that imbalance. Let's pull that over. Should be clear. This was the weekly objective. This was the target that we're looking for. Once we got above this, we have it. It's Friday. We can chill. This down candle right here is standing out as the start of this impulse. So on a lower time frame, this is very likely to look like a market maker model. This is going to be looking like a very big market maker model. High broken, displacement, lows. I'd be looking for right here. On EU lows broken, does that mean that all the eyes are liquidity? The current down run. I'll have to get back to EU, but I'm seeing sell side liquidity building right here. If DXY gives up the ghost, then I might entertain a short all the way down to here. Yeah, that's a decent push. I would be looking to take that if we get that shift. For this guy, if looking purely from this time frame, if we get a shift below here, let's put it on the chart. You get trading below here and then retracing above this blue line sets up my short bias to target this. So on principle, if I get a short inside this up candle, that's a potential 100-point short going into next week or today, depending on how aggressive it gets. I'll be taking that if it forms. It has to form in the order I want it to form. Here first, then retracement, right? If it goes below here into the imbalance and then higher, that's fine, because that's an imbalance. But when we get up here, I'd start looking for shorts. Obviously, the delivery from here to below this will be important if there are short-term highs, fair value gaps, all that good stuff. Those would be on the menu. So those are going to be points to watch. But for now, it's just an idea and we're waiting for confirmation. Frame the idea, anticipate the confirmation. If you get it, you take it. No confirmation. Okay, I was wrong about the idea. We don't lose sleep. Why the blue line drawn at the FVG? I'm drawing the blue line at the low that was created before this high. So we had this high broken here. So I'm not using this one. I'm using this one right here because it pulled off the high and then pushed. This low was accumulation. How do I prove that this is accumulation? Because it's happening in fair value. Oh, angel sounds. But yeah, accumulation in fair value is the start of the push. It needs to break and close below here to convince me that they're no longer buying this price level. If this, then that. Is it possible for DXY to go higher? Yeah, anything is possible, but the confirmation is what we're looking for. DXY could retrace and then push to this X, but this X is the focus. I want to see how price trades here. And I believe that the range is going to be between here and here. If that means the XY is retracing first and then push, then that makes UCAD spectacular. Shorts and then longs, and then we push higher. But again, we wait for confirmation. So, I mean, I could just do the H1 analysis on these time frames since we're here. It's gonna rob me of my tools. Same idea here. This is the last low that was broken. Accumulation at the low, then we push. All of these lows or these highs in here holds liquidity. So I think we talked about that. Yeah, all of this, all the way up to here would be very nice for retracement. Does it take all of this next week and then tank? That's I like that too. But right now, based on what we have here and just looking at all these pairs, I think there's a very strong potential for, let me be bold. Let me be bold. There's a strong potential for something like this to happen. And then I'll get like this. That. For the next 4 days, let me be bold and say that I want to see this delivery. I want to see one down day here. It would be nice if this low didn't take Monday's low, but it can, right? All that's possible. That's possible. But this would be absolutely textbook and make UCAD and then long, EU longs and then short. Perfect for next week or even today, depending on what happens. But that's what I'm expecting. Or that's what I'd like to see, right? If it happens, I trade it. If it doesn't happen, we don't lose sleep. So let's jump to some lower time frame and see what setups we can find for today. Let's see. Okay. I did say I was going to do one trading view, use trading view for one of these calls. Monday's call will be done on trading view, or at least part of it. Possible bearish OB on DXY H1. All right, let's see when we get there. DXY H1, bam. So we have the liquidity pool being tapped. Spoke about this. We've been watching it for about 2 weeks now. We did say that it would play out in 2 weeks. So now that it's here, where was the last time a high was broken in this fractal? Right here. Wednesday's high. So many things I want to say about that, but Wednesday's high was broken here. Imbalance, we did have a retracement. All of this is nice. Yeah, all of that would be very nice. Trading below that circle that somebody just drew, for me, suggests that we'd have a deeper run. If that deeper run, would that deeper run take here? It doesn't need to. It just needs to trade back inside this consolidation. I think this is a down day, open, close, this day right here. And then we could have more upside. So for right now, I want to see bearish DXY, but I want it to retrace. If it doesn't get below here, the idea is invalid for me. it has to take here first. Then we could see deeper runs. It's not, it is the last high by definition, but these highs where price creates a high and then it pulls off are more significant than this. This is technically a pause in the delivery. This is a retracement. So breakout traders are trading the breaks of this here and all that good stuff. So I'm looking for these guys here. Guys who bought here, price is trading higher, and they're putting their stops at the lows above the high. That is why liquidity rests above lows created above highs that are broken. What's your first validation for an order block? By definition, I want to see the order block break market structure. If there's a displacement that takes a high or a low, I mark those because the accumulation that was in or at those points was enough to push price in a direction to break market structure. Second would be where the order blocks form. Not every down candle is an order block. When you understand fair value and fair valuation, not fair value gaps, you'll see down candles and you'll, okay, that's going to be an order block. So for the last maybe a week ago, on a couple calls, I called order blocks being formed before they formed. That's because they were forming in fair value. There we go. So again, I haven't taken any trade all day. I haven't gotten sufficient confirmation. This is picking tops or picking bottoms scenario. So I'm literally waiting for my confirmation before I go. That's my edge. If my edge doesn't form, I don't go forcing, I need to be in a trade kind of vibes. That's how you know, they take the money right out of your pocket. This is a little bit sketchy. This is the low that was broken. Gold chopped around inside here for some time, which says to me a couple things. This accumulation could get swept before going low, or price might not get that high because we broke it here. Bearish order block tagged, more displacement, right? So this is an order block because it was formed in fair value. Tagged, and then we move low. So if an order block that we anticipate created this displacement, this guy should retrace the imbalances. Where the imbalance is, just right here. So this is the condition that suggests we may not need to trade higher. And gold is very heavy. Gold is very heavy right now. There's no bullish market structure shifts in here. Anything, even a retracement for me, is still bearish. So we need more information, basically. I'm not going to trade this. I want to see what it does here. So maybe I don't get a trade today. That's fine. As long as I'm not trading against my edge, I'm fine. I think this was a down day that we looked at some time ago as the original accumulation. Now you understand why this is liquidity. So now we wait. What high would you consider a shift? Let's see. If it takes here, this is not enough to be a shift because this is not the accumulation. This is the original accumulation. This was just a retracement to fill in unfilled orders. This high gets taken. This market is bullish. 1900 bullish, 1850 bullish, that type of vibes. On a lower time frame, there are signatures that you could use inside here. Like if we have a down candle get formed right in here, just above this down candle. If price retraces, creates a down candle, then we go above that. That's bullish. So that could be the retracement to run up here. It opens the door for a whole lot of manipulation, but yeah, liquidity right here. And you should know why. AU, same idea. Now this with AU is a little bit cleaner and I prefer this than gold. So we talked about how I wanted to see that 0.7 push higher on AU daily. Now look at this structure. 0.7 is coming in just about here. See the accumulation, displacement. We broke this low. The highs after we broke this low. How's liquidity? That I like. It hasn't shifted bullish yet, so it's just an idea for now, but I like that. EU, same idea. Here's the accumulation. The low is broken here. This candle, in my opinion, could be the same as this candle right here, which means this reaction is to be expected right there. But then we also have an imbalance inside here, so it could wick up in this before it moves. But either way, higher EU for today. Market maker model for here. I don't want to see a market maker model here because I don't have sufficient confirmation that says DXY is bearish and this guy is going to scream higher. Plus, we know that in manipulation conditions, gold and DXY walk hand in hand, which is never a good idea. GU looks like it could give us more upside. Been a while since I looked at EG, but if I'm expecting this guy to go up, then EG should be underlyingly bearish. So if you trade EG or you analyze EG, let me know what you think. EU up, GU up here, very good idea. GJ, talked about GJ yesterday. I want to see GJ higher, full stop. So now I have a little bit more confidence in my GJ bullish idea, since this going higher implies GBP can be stronger, and GBP stronger implies that this guy goes up. Nice and easy. And we already talked about the fact that we want to see shorts on this. We have less than a minute, so real quickly, let me throw a couple 5-minute charts up. Where's the liquidity? Huge London session, very huge London session. Broken here. This didn't come back. This is liquidity. This is a nice area to stock shorts. GJ, we're bullish. Or I'm bullish. We're accumulating below London lows. Are we buying sell side liquidity to trade higher? I like that. EU, we wanted to see bullish EU. It's accumulating below London again. Let's get them. Let us get them. And gold being bullish, we just talked about that. Accumulated below London lows and then it pushed. So everything just dovetails nicely. So that's going to be it for this call. And bet Lucy's in the chat. Oh, okay, cool. That's going to be it for this call, guys. Thank you for coming out, and we will talk in the group. Enjoy the rest of your day.